Welcome to Good Morning Hospitality, your one-stop shop for the latest news, noteworthy trends, and thought-provoking discussions across the industry. From hotels and short-term rentals to all things travel and hospitality, you'll find each episode equips you with the information that you need to start your week. Join us on Good Morning Hospitality every Monday, wherever you get your podcasts.
What's up? Good morning.
Good morning.
Hello. Happy Juneteenth.
We have the Happy Juneteenth.
It's a holiday.
Where no one's working. We're all just showing up here to chat by ourselves.
No, there's the people listening in later in the week.
Of course.
We've actually gotten our highest listenership on holidays that we've broadcasted. So
true.
Look out for big numbers today.
It's so nice to have us all together.
I know. I miss hanging out with you guys like we did in Barcelona. It's like, can we just go back forever? Forever and ever?
I would love that.
Yeah. I know you would. Jamie Lane, how are you doing, my man? It's good to see you.
I'm great. Thanks for having me back. Had a great.
Thanks for having me back. You're a residential host here. You have a permanent spot.
I still get excited every time I get the email that it's my week to join again. So
of course. Well, I've been seeing a lot of you recently. How was the Skiff conference where you and Demi got to be on stage and presenting some numbers and all the data stuff that you do?
Yeah, I loved the Skiff conference. It was so different than any other short-term rental event that I've been to in the past sort of 2 or 3 years. Very much on the more B2B side. So a lot of the sort of major companies in the space, not a lot of operators, but a lot of and sort of large investors, people sort of allocating money into the space. I'd say there's a lot of the movers and shakers of the industry getting together and talking about what's next. And a big theme there was, I think they coined it the great moderation of the sort of rapid growth that we saw up into the pandemic, rapid growth during the pandemic, and now things are going to slow down a bit. And that sort of impacts the industry in quite a few different ways.
Is this common in every industry? So you've got the rapid growth, and then the institutional capital lags behind, and then it kind of stagnates it because the supply-demand balance is all out of whack. But long-term, it's going to be good for the industry. Have you seen any correlations like that?
And long-term, it's good for the industry. I think what we're in now is a bit of boom and bust cycle of people get excited, they move in, and then they maybe move out. When people make institutional investments, they're bringing in money from, let's say, a pension fund that they want to invest over the next 10 to 15 years. And the time horizon they're looking out is not over 1 to 2 years, which a lot of investors are looking at today. They're looking long term, and that sort of investment thesis is great because it gives people the ability to innovate because they're not looking at just making money over the next 12 to 24 months and make bigger bets, which I think are what's going to drive the industry forward.
Yeah. Do you see it being more hotel-like in the future where like institutional hotels are 40-50% of the market, and then the rest are kind of boutique or independent?
Yeah, I don't think we get anywhere close to hotel level investment. And you think of commercial real estate, you've got office, industrial, retail, multifamily. Hotels is like the fifth ugly stepchild. And then you've got all the other forms of alternative commercial real estate like self-storage and data centers and just now single family rentals are starting to be a piece that and it started maybe 10 years ago that people got into and institutional investors got into single family rentals. So short-term rentals is maybe just on that. So we're maybe at the start of a 10 to 15 year cycle where it gets to be any significant piece of the investment. So it is beginning. I talked with quite a few people that are dipping their toes in. They're looking to make their first investment, and their first investment is going to be $20 to $50 million. Like
just a small bet.
A small bet, yeah.
It's kind of like what we're seeing with some of the roll-ups of the softwares, right? So Track has now invested in several companies, and they're making an institutional bet in the long term that rolling more under one umbrella is the right bet. So I love it. I think it's great for the industry as a whole. So let's see what happens in the long run.
Yeah, I think that's where you get like the real power, like the staying power behind products like that, when you can really devote like a significant amount of money to improving them.
Yep. Well, speaking of staying power, I was having this quite a great conversation with our team at Sojo, and the staying power. We were talking about like, hey, what kind of ad copy do we want to talk about? We're like, we don't want to do any ads right now. Today, we're not doing ads. And the big thing about that is that we just want to give away free stuff. So for all of our listeners, if you want some free stuff, just grab the link in our show notes. That's it. There's no strings attached. Just get some free stuff. Free coffee, which I've had a little too much.
Do we all have our mugs?
Jamie's looking around. Where's Jamie's mug?
I haven't got my mug. Not that they didn't send it. My building sucks with mail, and I've had like 4 or 5 packages completely gone. So Joe, if you're listening, just please help.
It's honestly, I love this mug. It's a great mug. Just like as far as mugs go, excellent quality. Whenever you get yours.
Yeah, we should do a segment on the show every Monday. It's like, what's the mug of the week? What's everyone's mug this week? And then we can show ours, because that would be fun. I'm a big coffee mug fan. So
we're all also drinking coffee because this is all live on Monday morning.
Yeah. Exactly.
Michael, speaking of Monday morning, did you have a good Father's Day?
I had a great Father's Day. Yeah, we went fishing and caught a little fish. But yeah, he's at the age where he understands now what is being celebrated. So he was great, being very kind to his daddy.
That's so cute.
That's so
what about you?
I had a great one as well. My 5-year-old was super sweet, all cuddles in the morning, like wouldn't leave my side, like holding onto my leg, like, Daddy, it's just going to be me and you all day. We're going to have the best time. And I was like, I'm going to go mountain biking with a buddy and enjoy. And we had great time in the afternoon hanging out, but I got some me time in the morning, which was nice.
Always good.
Yeah.
Well, speaking of me time, we covered a couple weeks ago that 30% of hotel development in the U.S. is either extended stay or suite style inventory, and wanted to hear from the numbers guy in short-term rentals. Like we saw some articles on hotel lock-off rooms. It's not really the same experience sharing 2 hotel rooms as maybe a 2-bedroom short-term rental. But can you give us some numbers behind lock-off rooms if you have them, or bigger inventory types? Because I also doubt any of these hotels are going to go to 3, 4, 5-bedroom unit types in some of their buildings. That'd be a lot of lock-offs.
And when you look at inventory around the world for short-term rentals, the vast majority of inventory has 2+ bedrooms. So when we and the sort of hotel style inventory in the short-term rental industry, and yes, it's there, but the vast majority of it is larger homes. And one of the reasons why I think we're seeing this emphasis, one on extended stay hotels, and the other of just creating the systems related to having sort of adjoining rooms, and the big thing there is being able to confirm adjoining rooms, which just hotel companies haven't been able to do given their property management systems. So one, the staying power of that demand. So it was when I first joined AirDNA in 2020, it was the theme I talked about. And the larger the unit, the better your performance. And we see that still playing out today of 1 bedroom, private shared rooms, like global demand is only up 7% relative to 2019. You get into 2 bedrooms, it's up 37%. You get to 5+ bedrooms, it's up over 68%. So like that staying power, when people look at that, they're like, oh, guests are really still preferring this. And then when you look at like on the other way, the like year-over-year growth. So, and the pushback that I expect you to give me, Michael, was like, yeah, Jamie, like that's playing out, but like where are the trends going today? Like, is that still where we're seeing the fastest growth? Like you'd think like Airbnb pushing rooms, like, and the sort of growth of the cities coming back, I'd expect the fastest growth in demand, the fastest like increases in occupancy to be coming from the smaller units. And like, that's still not the case. Like the 1 bedrooms growth is still only about 15%. And year-over-year growth in 4 and 5+ bedrooms is 28%. So yeah,
I'll throw a different one at you. So
okay.
With those numbers given, why is 30% of hotel inventory that's being built right now suites or extended stay?
Why isn't it more?
Well, if you're saying the better room types are 3, 4, 5 bedrooms,
yeah,
why are they not building 3, 4, 5 bedrooms?
And maybe that's their. And one, I suspect, and you tell me on the hotel suites, maybe they do some configurations where you can sort of combine suites. I suspect that's where they're sort of pushing more into the apartment product of that, where you can start getting into the 3, 4 bedroom apartments and have the kitchen. And I don't know if it has something to do with hotel floor plate, something that makes it hard to do the bigger units, or maybe not wanting to make the bet on that large of units. But there's definitely the demand out there.
Yeah, I was thinking that that's probably like they're taking these steps into kind of the extended stay suite apartment universe, but I would say that them going from like a regular hotel room to like a 4-unit or 4-bedroom apartment is not going to happen. I hope not. But yeah, it's interesting because I mean, this is something that we know from, our product is that the 1 bedrooms and studios are a commodity. You're like almost directly competing with the hotels, even if you have a kitchen and a living room and you're getting more space. Like people don't really necessarily have that in their mindset. Whereas once you can add a 2nd bedroom or a 3rd bedroom, like those units fly off the shelf. And I think one of your earlier points about the infrastructure that these hotels do or do not have on the back end to accommodate the adjoining units, like that's one of the most important pieces of technology we have right now, is being able to easily sell our combined units on whatever platform and have the system easily, block off those units and reserve them. In previous software that we had, it wasn't possible, and we had to do all of that manually. So you'd have to like catch a booking coming in, block off the other units. Like it just left so much room for error. So the technology piece behind it is like probably one of the biggest ones when it comes to like actually being able to properly sell that product type.
Yeah, I think that's a good point. Probably why they're building them in 1 and 2 bedroom configurations is what they saw during COVID. They can flip these back and forth between long-term rentals and short-term rentals or hotel rooms. So from a developer standpoint, it's a malleable inventory type. It might not be chasing the highest demand market or lowest inventory supply, but it is quite flexible and a safer bet than building just a 180 square foot hotel room.
Yeah, I'll say from my hotel days, the hard part, like Jamie said, and to Brandy's point too on the tech, you couldn't confirm it, and if you did have it available, you have to pretty much shuffle the whole deck of placement in the way that the room assignments were and all this other stuff. So to see, like, it's great to have. I'm always, and Jamie's data can obviously, prove my thinking wrong, but I'm always kind of skeptical that this is like actually a newsworthy article type deal. I know we saw it kind of posted on some publications this last week where it's like, do people want connecting rooms? I would think, as Michael or as Jamie said, like Michael would kind of give pushback. Like, isn't there any other topic in the industry that people actually care about more than connecting rooms? Or is that really the hot topic today where people are like, yeah, this is great. We're really looking forward to our connecting room stay in whatever destination.
Well,
Like,
I think it's people that are trying to fit a square peg into a round hole of, well, we can compete with short-term rentals because we do have 2-bedroom units. You just open up the lock-off room, but it's really not the same. There is no living room for, any of us to go work in the main room while the kids and spouse are asleep, right? Like there are benefits to short-term rentals, a full kitchen, a fridge that is not, already stocked and weighted. When you pull a Coke out, it charges you $5 automatically. Right. So I do think the hotel world, traditional hotel world's push back. Now, some of the boutique hotels or modern hotels are building villas on site. They just aren't, they're not going vertical with them. They're just spreading them out around their campus. And those are super cool for the families that still want to go and get that resort style, traditional hotel feel, but also have their own unit, their own property.
And Michael, traditionally, I've only seen that on like the luxury side. Have you seen that at any other lower price point than super luxury?
No, just luxury.
Because I'd suspect that there'd be just as much demand for it on a more budget type property, but probably harder to do at that price point.
Yeah, if you think about the cost associated with building out those kind of like villa styles, even if it's like a budget, your ROI is going to be, not quite the same.
Yeah, hotels look at price per room basis, and the math is a lot different in short-term rentals, and you can't just go and sell the asset as higher cap rate just because you've now turned it into this house into a short-term rental because it's literally sitting on your resort. But right. It's a good option, especially for your loyal members that might be using points when they're traveling. So I do hope more mid-market or mid-luxury will slide into that.
Well, I want to ask Jamie, since that you are our resident, co-host with the data, the number one data guy that we can always count and trust on. What's actually getting you excited? I find it hard to believe that adjoining rooms would be the topic that gets you excited with data. Where, like, what is it? Like, what's something that's different that we're not seeing, or maybe that isn't being talked about as much, whether it's with short-term rentals or any type of lodging type? I know you had quite the dive recently, but would love to know the excitement side.
We did release our mid-year outlook report for the industry in last week. So hopefully you can drop it into the show notes and people can take a look. So it provides our forecast of the industry in a different range of scenarios. And you heard it at Skift, and it sort of comes out in the report of just how strong demand is for travel right now. You hear it with the public hotel companies. You see it in our outlook of our baseline forecast, which anticipates a mild recession over the next year, is still calling for 9% demand growth year over year. So that combined with about 12% supply growth, like the industry is seeing massive gains. We're still expecting a slight decline in occupancy to continue out. So now we've seen 15 consecutive months of declining occupancy. I I suspect Brandy's seeing that in a lot of markets. That's playing into weaker pricing power. I mean, overall in the U.S. now, we're seeing about 2% growth in ADRs. In quite a few markets, that's negative. But given that now we're 3 years into this recovery, and we're still seeing 10% demand growth, that even in a recession, we're calling for people to continue to travel. And we rely on Oxford for our Oxford economics for our economic forecasts that we sort of bring into the models. So far, and economically, we've been able to skirt past and not go into a recession. I'm starting to believe more and more that we're gonna be able to get through this over the next year without a recession. And if that comes true, I suspect we'll continue to outperform our forecasts. And just what that means for the industry, because typically, and we do go through this boom and bust of cycles. And given that we've seen, and last year supply was growing 20%, I think Brandy, you saw most of that supply in your market.
Yep.
And if we're able to take this next 12 months and fully absorb that supply, if we're able to get international travel coming back into a more normalized pattern, for which international travel is still down 20% to the US, that's going to, and we are expecting the dollar to weaken some. That's really going to help those markets and get past this next 12 months without a recession and get into a more typical growth cycle that the industry expects. I think that really sets us up for a lot of new investment coming in. It gives people a new investment on the investor side of like, and wanting to support companies like Brandy's, wanting to support companies like Michael's, like making bigger bets on the industry on the long term. That really sets us up for long-term success.
Yeah, I was actually, when you're going through those numbers, I was contemplating, who is this actually good for, right? If we have a 9% demand growth, but a 12% supply growth, essentially demand is shrinking, right? So
occupancy is shrinking, demand still is going up. Like net rooms stayed in a short-term rental up.
RevPAR is shrinking, right? Because occupancy and or ADR is compressing. So it's great for tourism agencies, Visit Florida. It's great for Ed Bastian over at Delta, and it's great for Brian Chasky over at Airbnb. But in terms of operators, I guess maybe more supply is a good thing, but harder to make each unit more profitable if occupancy and ADRs are compressed, right?
So maybe taking the counterfactual of, if we didn't see interest rates go from 3% to 6%, we'd still be having 20% supply growth, I'd bet, for short-term rentals right now.
Mm-hmm.
That's dropped over the past 12 months from 25% growth to 15% growth. And I'd put that squarely on the rise of interest rates and making it more unaffordable to invest in this sector. We expect that to slow further. So full year, and over the next 12 months, it's only 12% growth. So in the 2 years leading up to the pandemic, industry was growing 20% per year supply. So the fact that we're still operating at RevPAR levels that are 30% higher than 2019 levels, we're only going to see a 1% decline, all the while we're seeing investment slow, is, I'd argue, a good thing for operators. That, the sort of term I use is like persistence at the peak. Like, we're at the peak and we're going to stay there. And the sort of high interest rates slowed supply enough where I don't think we're going to get into a real oversupply scenario outside of a few markets, and of which Miami might be.
Yeah, I'm like,
markets.
It's always so funny when hearing this. I'm like, this is not my reality. But yeah, I think it's interesting. I know Miami's not the only market, but there's some other urban markets where there's a lot of building going on, where the type of product of either it's condo hotel or it's just built in that you can do short-term rentals, like that is going to continue to be popular. So I think that for the urban markets where you can do STR legally, it's going to the supply is going to continue, because even normal multifamily apartment projects are going to be allowing, you to rent your space. So even if it's not specifically, money and investment allotted towards STR, there is some sort of supply being added through normal multifamily. So yeah, and we kind of touched on this a little bit earlier, but the international demand, that's something that is, you're really noticing the lack of that. And especially in big markets, like I think, coastal cities like Miami, which really rely on that international tourism, you're starting to feel that now that people are going elsewhere, for vacation. So it's interesting seeing demand, as you're saying, like definitely still there, but it's not nearly as hot as it was in the last 2 years.
Yeah, and especially for those urban markets, like Miami was so unique. I mean, among the large, like gateway cities, like these are the markets that are typically international travelers are coming to the U.S. to visit. Like Miami, almost 50% of the visitors were international pre-pandemic. Miami was a great market in 2021, 2022, as people wanted to stay domestic, but wanted that sort of big city beach feel. So they went to Miami. Now, we saw them in Barcelona. We saw them in Cannes. We saw them, and the sort of entire world's opened up, and the demand in Europe right now in a lot of those large beach markets is just unbelievable. It's going to be such a strong summer for Europe, especially on the high end, and that demand was going somewhere last year, and as people sort of switch, you're now seeing some weakness on the backside.
Mm-hmm.
It's just time for Romy to go international. Come on.
I know.
Baby.
Listen, I've been volunteering to go
Barcelona.
be the first Madrid. I listen. I really anywhere. If we pick a European market, I will be there. Trying to get the EU passport one way or another.
There you go. Jamie, I got 2 more questions before we wrap up. A lot of my friends are operators, and they do seem to be having some challenges over the past 12 months. Is this data basically saying get through the next X amount of months and there's green pastures ahead? Or what narrative would you share with the operators that are struggling right now?
One, I would really want to get comfortable with the supply that's coming into the market, and how much supply is coming in, how much supply is being absorbed, and how that supply is impacting the performance. Because if it's not supply that's causing it, then there's other sort of structural issues in that market that may be a bigger concern, because supply can typically be absorbed over some period of time. Like if you have people, and because broadly these markets are going to grow anywhere from 2 to 7-10% a year. So if all of a sudden you have a market like Miami that saw 30-40% supply growth in 1 year, that's going to take some, and if demand's not immediate, like there's not so much untapped demand that it's going to immediately be absorbed, that's going to take a couple years to sort of move into the market, and for for existing operators to get pricing power back. So I'm optimistic that supply is going to continue to be low over the next 12 to 24 months, because I don't expect that we're going to go into a recession, that interest rates are going to continue to stay high, and that's going to suppress investment down to anywhere from 8 to 10% over the next 24 months. And that's going to be very beneficial for existing operators. You're seeing that in the hotel side too. and construction activity, stuff coming into the pipeline is reaching all-time lows. That means for the next 2 to 3 years, we're going to reach all-time lows for new supply growth in the hotel industry. And I suspect that's going to play out for short-term rentals as well. And that that gives you an opportunity to sort of regain pricing power, regain occupancy gains.
Well, we don't want to gouge anybody over here, Jamie.
No.
I was buying my tickets for a wedding in London in September, and the prices are so insane that I immediately reflected back to our WhatsApp conversation about this because I am furious. I thought I was going to use my miles to book a first class ticket, and I will be lucky if those get me in economy. I am so pissed.
Oh yeah, it's like $4,000 to fly to Europe right now.
Yeah, and I just saw Andy comment about this, about domestic air travel being so painful, and that could be feeding into international travel. And that's probably the case. If you're in Europe and you're like, okay, we could go to Italy, or we could spend $4,000 on tickets and go to Florida. Like, I don't think that's, that's not a hard decision to make.
Yeah. And especially given that the dollar is still making it in relative terms 20% more expensive. So on top of that, they're having to trade their dollars or euros for dollars, which is not a
great for us going to Spain, but not inverse.
No.
All right, last question, Jamie, and I ask you this question every week or every time you're on, every month. But I'm actually gonna deviate slightly.
Yeah.
If you were investing right now and you had to choose between a small 4-unit urban multifamily building, a large beach house, or a, call it 8-unit glamp site, what would you be purchasing?
Probably the glamp site, and it has to do with acquisition costs. So looking at beach markets, and they're still home values are still broadly at peak. We have not seen much home value reduction there, which makes it really tough to invest in beach markets right now. And that's where we're seeing the least amount of supply growth. We're now like 5% growth in supply in beach markets right now. It's dropping quick, and it makes sense when you look at the investment dynamics. Urban is still really tough too, and it's mostly because we're still undersupplied for housing. So if I wanted to find an investment at a good cost basis, it would probably still be on the glamping side. So small town rural, that's still where we're seeing the most growth in demand. So I still would have expected that would have started to revert now, but people really do and want to continue to enjoy nature, travel outside of these big cities, and luxury yurts are hot, and you can get them cheap. You can get the land still relatively cheap, and you don't have to put your money into construction. And for the next 2 to 5 years, I still see that as being a great investment.
Awesome.
I love it. I know what I'm putting my money at. Yeah.
Love the curveballs.
I love it. Well, Jamie, it's always great to have you. We love seeing your handsome face on Monday mornings with all the data and the numbers. Anything exciting before we wrap up? Anything in the future that you are looking at right now? Could be Air DNA related. It could be just Jamie Lane related. Are you going to another conference? Are you speaking? What is it?
Yeah, we're going to have some exciting news to announce soon on the Air DNA front. So I'll leave that as a teaser. And on the conference side, companies going to the IMN conference in Austin later this month. I don't think I'm going. I'm trying to stay low on the travel front a little bit and hang out with the fam.
Have fun. I won't be there.
Have fun. I won't be there.
Yep.
Taking 2 weeks up in Maine in July. So taking my 5-year-old son up there, taking a week off, and we're doing some work remote from up there too. So that should be a lot of fun. If anyone's up in the Mount Desert Island area, I'd love to hang out. And then we'll get back into fall conferences, and there'll be a lot. So
Yeah.
I'm already tired. And
I was just about to say, I think I just got even more tired
Right.
after all that. Well,
I'm
awesome.
kind of scared. I've got 2 flights to book to Barcelona this fall and might need to get on that ASAP.
I won't say
oh
get
no,
out.
Jamie has to go to Spain again. How terrible.
At least it's on company dime.
You guys want to
Yeah.
come?
Yes,
Yes.
I do.
Brandon and I volunteer as tributes.
I'll keep
I
my
love
hand
it.
down.
Well, it's great to see you guys again. Happy Monday. Happy Juneteenth to everyone tuning in. And for all of our listeners, make sure you like and subscribe to, of course, our sponsors, the show, and then, of course, our personal accounts. Come on, give us all some love on like LinkedIn or Twitter. I don't know, whatever you guys want. And it's great to see you guys again. We'll see you all again next week.